Welcome. Today, we're going to peel back the curtain on the corporate world and learn something super useful: how to read a company's financial report card. This is how you find out who's really doing well and who's just faking it.
So, how can you tell if a company is actually winning the race? I mean, really winning. Forget all the shiny ads and marketing slogans for a second. We're going to dig into the hard data to see who's really leading the pack.
And the best tool we've got for that is the balance sheet. Honestly, just think of it as a financial health report. It's a snapshot taken at one specific moment that tells you pretty much everything you need to know.
At its core, it's a really simple idea. What a company owns, its assets, minus what it owes, its liabilities, equals what it's truly worth, its equity. That's it. That's the fundamental rule we're going to use today.
So to get our hands dirty, we're going to put Toyota right under the microscope. We'll be using their 2020 annual report, and trust me, by the time we're done with their numbers, you'll know exactly what to look for in any company.
All right, let's start with the first piece of the puzzle: assets. These are basically the engines of the company, right? They're all the things a company uses to actually generate value. We're talking everything from cash in the bank to those huge factories building the cars. And in 2020, Toyota had a whopping 83 billion Pakistani rupees in total assets. Now, that's a massive number for sure, but what's really fascinating is the story behind that number.
And here's where you can see their strategy in action. Their investment in property, plant, and equipment, the core business, it's shot way up. That's a great sign. At the same time, they nearly doubled their short-term investments. So what does that tell you? It shows they're not just letting cash sit around doing nothing, they are actively putting it to work to make even more money. Smart.
Okay, so that's what they own. Now, for the other side of the coin, liabilities. This is the what it owes part of the equation, all the debts and bills the company has to pay back.
And this right here, this shows you just how strong Toyota is. They had $63 billion in current assets. That's stuff they can turn into cash pretty quickly, and only $38 billion in short-term debts. The big takeaway here? They could pay off every single one of their immediate bills and still have billions left over. Now that is what a stable, low-risk company looks like.
And that brings us to the final piece: equity. After you take everything the company owns and pay off everything it owes, what's left over? Well, that's the company's true net worth. It's the value that really belongs to the owners, the shareholders. And for Toyota, this number has been on a beautiful, steady climb. Because their profits and reserves are growing year after year, the value belonging to their shareholders is going up right along with it. This is basically the textbook definition of a healthy, really well-run company.
But how does Toyota's amazing performance look when you put it up against its biggest rivals? This is where the fun really begins. We're going to put Toyota in the ring with Suzuki and Honda to see who really owns the road, at least financially speaking.
See, a single year is just a snapshot. To get the real story, you have to look at the trend over time. So we're going to compare their financial health over a 5-year stretch to see the bigger picture.
This is where we separate the sprinters from the marathon runners. Let's see how these companies have handled the bumps in the road over the last 5 years. Okay, let's kick things off with fixed assets, their factories and equipment. Look at Toyota's path. It's just a clean, consistent climb upwards. But now look at Suzuki and Honda. Whoa! Both of them saw pretty big dips recently, with Suzuki dropping a full 20% from its peak. This tells you that while Toyota was building, its competitors were actually scaling back.
And when you see it on a chart like this, the trend is it's crystal clear. Toyota is just marching steadily upward. Suzuki and Honda, on the other hand, look like they hit a wall and then started to slide. It really makes you wonder, what happened to them?
And for Honda, here it is. This is the smoking gun. In 2019, they had major operational problems. They were delivering cars late, and it forced them to pay huge financial penalties to their customers. This wasn't just a PR headache, it was a financial disaster that literally drained their cash. It's a perfect example of how real-world mistakes hit the bottom line hard. So what did all of this mean for the owners? Let's check out shareholder equity. Once again, Toyota shows that same consistent, healthy growth, adding value for its shareholders year after year. Suzuki, though, has seen its equity actually go down since 2018. And Honda's growth just totally flatlined after that big financial hit. The numbers really don't lie, do they? So, after looking at all the evidence, the assets, the debts, the 5-year trends, it's time for the final verdict. Based purely on the balance sheet,
Who is the undisputed winner here?
Well, the 2020 scorecard really says it all. I mean, it is a clean sweep for Toyota. Total assets, they're on top. Investments, Toyota's $41 billion just dwarfs the others. Reserves and shareholder equity, it is not even a contest. This is just a totally dominant performance across the board.
So, the final call is this. When you look at that financial report card, Toyota isn't just winning the race. It feels like they're running on a completely different track. They have consistently grown their business while their rivals have stumbled.
So we've given you the tools to look past the hype and read the real story that's written in the numbers. The balance sheet tells a powerful tale. So the final question is for you. Now that you know how to look, which one of these stories gives you the most confidence for the road ahead?